Hello everybody and welcome to the weekend market briefing. We're going to take a look at the markets and see what's coming up next week, see if there's any good setups we can get into. But as always, before we get into that, we'll just quickly go through our disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions and not to be considered advice to buy or sell any security. All trading and investment decisions are your own and done at your own risk. All right, now that we got that out of the way, what do we got coming up this week? All right, so Monday. So this week is kind of about PMIs, Purchasing Managers Index, or indices. We've got a couple of them this week. And these are kind of the next important numbers in the inflation picture. And with regards to, are we in a recession, not in a recession? So on Monday, we've got the ISM Manufacturing Purchasing Managers Index. So that is very closely watched. And we'll be looking to see, just how this was negative last time. So that was, hinting at a recession. And we're, looking to see how negative it's going to be this time. And by the way, if you're watching this number, negative on this is a number below 50. The index goes from 0 to 100, so 50 is the midpoint. Anything below 50 is negative or contraction. Tuesday, we have the JOLTS job openings number, another very closely watched number for the health of the economy. On Wednesday, we have the ISM Services PMI. So this is, purchasing managers in the services industry. On Thursday, we have unemployment claims, as always. And on Friday, this is a really big one, non-farm payrolls. This comes out monthly, and it gives us a really good sense of how the economy is doing. So, if this slips a little bit, this is going to be one of those numbers, I think, like GDP was, where bad news is good news. As I'm sure you know by now, GDP came in negative for the second quarter in a row, which meets the technical definition of a recession. A lot of people are arguing about, but jobs are going up, and that has happened before. Jobs can continue to rise even in the beginning of a recession. So anyway, people can argue about it or whatever, but we are essentially in a recession. And so these non-farm payrolls will be closely watched. If the numbers slip a little bit, like I said, I think that's probably good, because the main thing driving the stock market is inflation and the Fed's reaction to it. The reaction to it is monetary tightening and raising interest rates. So any signs that the economy is weakening a little bit, and we're looking for the Goldilocks prince here, right? We want to see the economy weaken a little bit so that the Fed can back off their interest rate increases, and that will be good for equities. All right. So speaking of equities, let's get into what we've got for earnings coming up. So we had a really busy week last week with all of the large cap tech. So now we're kind of getting a lot of the second tier names coming in this week. And I've highlighted a bunch that I think are quite important or worthy of watching. One of them is, we've been looking at home builders a lot lately, and this one here, Builders First Source, we looked at for a trade. Didn't actually take it, but it's looking okay. I think we may look at that later on in the video here. But Builders First Source, before the open on Monday, it had a nice move on Friday, so it's a little late to get in there, but there may be a reaction play in that for the traders amongst us. After the close on Monday, we have Pinterest. So this, I was going to say this will be interesting. That's just too punished for me. But this will be watched. It should be a good one to watch after hours. Before the open on Tuesday, we have Uber. A lot of people will be watching that. That has the potential to move the market as well. If they miss and suddenly drop a lot, this could actually bring the market down in the pre-market, which could be set us up for a bad day. So after the close on Tuesday, we have AMD, really big, name in the chip semiconductor industry. So that will be very closely watched. We have PayPal on Tuesday after the close. Oxy, the oil company we've been watching closely. SoFi, I know a lot of us have played this, watched this, invested this over the last year or two. Not sure how many people are still in it, but this will be interesting to watch. Airbnb, of course, another one that will be very interesting to watch. On Wednesday before the open, we have Moderna. I'm not sure if people still watch that, but it could be interesting. CVS is something that a few people are watching. Lucid, a EV car company. That could be, important to some of the other second-tier car companies. Obviously, most of these companies sort of move up and down with Tesla, but this could cause some movement in some of its peers. So you might want to, if you're playing this or thinking of playing this, you might want to also look at some of the peers, like NIO, of course. You know the names that you should be watching along with it. Robinhood should be interesting. Mercado Libre, this could give us a sense of what's going on in South America and Latin American economies. So I'm going to be watching that for more of a macro sense. I haven't invested or traded this company for quite a while. I'm just sort of scared of that part of the world a little bit, especially with a potential recession coming or underway. Yeah, it'll be interesting to see what their sales are doing. So definitely worth looking at because it will give you an idea how that part of the world is doing. And speaking of other parts of the world, Baba has their earnings on Thursday before the open. Now they got hit hard on both Chinese and U.S. government stuff during the last week, and are down a lot. So hopefully they can pull a rabbit out of their hat here with some good earnings and get the stock on the way back up again. And you can see, it's got some other names there on Thursday before the open you might want to watch. AMC is one after the close on Thursday that everybody's going to be looking at, and so is Block, also known as Square. Cloudflare is one that I'll be looking at on Thursday after the close because I do have some investments in this this net security kind of space. My main investment there is CrowdStrike, but this may give us some hints as to how that one might do. An interesting one for Friday might be DraftKings. This space, we're going to look at PENNs later because there's a really nice setup there. So this space is starting to come to life again after a massive downtrend. I mean, it's almost a pot industry kind of downtrend that this gaming space has been in. So yeah, they've got earnings on Friday, and then we've got PENN we're going to look at, and you'll see why there's a nice setup there, a better setup in PENNs than DraftKings actually. So that's it for our earnings. So let's dig into the market and see what's going on there. Where is my chart gone? There we go. Oh, we don't want to look at that one. All right, so here is the SPY. S&P 500, and you can see that we have been on a bit of a tear. We've got a really nice rally going. That rally started off the June lows here, middle of June 17th, rallied up, pulled back a little bit, put in a couple of higher lows, double bottom even, and then was unable to put in a higher high here, which gave us a bit of a trading range. Well, we broke out of that trading range recently, and the last 3 days have been outstanding. And you can see this behaved well on my little orange squiggly line that I drew in the last ticker talk, which was about a week and a half ago. And I also posted on first thing on Wednesday. Yeah, it was Wednesday morning. I posted in the Discord first thing and showed sort of my prediction or my thoughts that once this had gapped up a little bit on Wednesday morning, it just felt like, because this day on Tuesday, after the third down day, and then found support at the 50-day moving average here, which is the green line, and just above that 21-day moving average. I just felt really strongly that once we had gapped up on Thursday, we're off to the races. We are ready to go because it really could have fallen apart here. One more red move. If this had gapped down, we would probably this weekend be talking about whether this support here holds, or possibly even talking about whether this support here holds. That was getting really dangerous right there. But we broke to the upside. We had three really nice days, and now we're kind of right into a resistance zone. You can see I'd have this 411 area marked as a strong resistance. You can see this consolidation back here, and I've marked out the pivot high off of that, the 417.44. If we get above this pivot here and hold, wow, the shorts are going to be freaking out. I think they're already starting to freak out a little bit. Just a little bit, though. I think a lot of what we're seeing here is a little bit euphoric, but it's mostly coming from large cap tech. And that's a good thing. We're not seeing it as much in the small caps and micro caps, as we'll see in 1 second. But I am seeing some euphoria and some really super risk-on behavior in the market that does scare me a little bit. So, with that being said, we're coming into a resistance zone. We've had a really nice run on a really good rally. I think it's healthy if we go sideways. So that would be the healthy thing, and I think it would be normal if we started going sideways here. I think it would also be normal if we had a pullback. Now, if we do start to pull back, hopefully that doesn't get too deep. So I think the probabilities of sideways or pullback are quite high. I also think there's enough euphoria in this market right now that we could just push right through, and then it becomes structural. Then shorts are really covering. Then the FOMO really starts to kick in, and who knows where we go. And if we really do start to move, if we move up to this trend line here, or even up into this 450 area, I think we've set ourselves up for a big move back down. But I'm probably getting a little ahead of myself here. But just want you to be aware of what's going on. If you're feeling FOMO and planning to jump in, feet first on this, you really do need to be careful here. I know we want to be in on this move, but just be cautious. It's almost time for a bit of a rest here. All right, let's look at the Qs. Much the same thing going on. You can see we broke out of this pennant that had set up here, broke out of that nicely. We pulled back and tested it and moved away from that. So this one is also saying sort of all systems go. Really nice move off the test of these moving averages, and now you can see we've got an accelerated uptrend. So I mean, this looks great, but again, it's come into a bit of a resistance here. We could just blast through it, but there's a number of levels overhead here in the Qs. IWM, the Russell Small Caps. This is behaving beautifully off of this. I mentioned at least a month ago, maybe even longer, that this looked like it was setting up a cup and handle here, and I drew this line, and it has behaved so well off that line that I drew. So I guess it's telling us we have another move up into this resistance area right here at around 192, and then it's time for the handle to form. Let's see if that plays out. If that plays out, if it did form a handle here, or it might form the handle over here, and then broke out of that handle, I would be all over these small caps. Because this is such an obvious pattern, or would be such an obvious pattern. You've just got to get in on that. Okay, next one up is the microcaps. Now these have underperformed in my opinion, but still not looking too bad. Although they're coming into the top of this gap here. We've got that long-term downtrend line right there. We've got the 100-day moving average overhead. This is a good place for these to either turn around and start moving back down, pause, or have a really big breakout. again, it's there's so many. Everything seems to be at a real inflection point here, and with this much euphoria in the market, I just think breakouts could really happen, and we could have have this euphoric blow off move higher, and it's they call that a blow off because it's not really a good thing. I'd much rather see a grind higher or rally for a week, pull back for a couple of days, rally again for a week, pull back for a couple of days. That's the really like to see the stair step up because that's something we can play. All right, the volatility index is behaving perfectly. It is stair stepping down. Now we are coming into this 20 area, which is normally acts as resistance. That's an important zone. I suspect we're going to bounce off of that. I don't think they're going to let this move through 20, and I think we still need to be in this sort of this 20 to 24 area here on the VIX. The 10-year yield continues to decline. The downtrend on this is almost accelerated. So this is good for equities, right? I mean, this is telling us the bond market is saying, hey, the Fed is going to be backing off on this tightening cycle soon. The Fed, and speaking of the Fed, of course, we had the Fed last week on Wednesday, and they raised interest rates, the overnight rate, 75 basis points. Powell in his press conference was fairly hawkish. But we went up on it all, and I think the reason we went up is that the Fed has been very hawkish, and they came out on Thursday or on Wednesday, sorry, and Powell in his press conference was just hawkish, and he pointed to a couple of things that were slightly dovish. And I think the market just grabbed onto that and rallied. It's like, okay, the Fed has been so hawkish, and now they're just plain old hawkish. And the market really seemed to like that. And the bond market liked that too. And we're seeing that in this 10-year yield. All right, what's next? Oh, the dollar index. Okay, dollar index. Where did you go? There you are. All right, so here's the dollar index. We were talking about how this steeply rising trend in this was just bad for equities everywhere. Bad for U.S. equities, bad for emerging market economies, bad for even more mature economies around the world. So it's really nice to see this pulling back. And you can see that we've broken through that accelerated trend line now. We have just broken through this trend line. I suspect we come down a little into this 105, 104 area here with this trend line and the 50-day moving average, and that will be the end of the decline on this for a little bit. Possible, I guess, that we could come down to 104 here, which would be major support. I'd be shocked if it goes any lower than that. But if you want to be long equities, you want to see this coming down. All right, what's next here? Oh, you can see I've got my crypto watch list over here. These are all green right now. This is live. Cryptos have been rallying. Might as well take a look at, Ether is actually the one that's been doing the best here. Really nice rally off the bottom in ETH. So, this is also indicative of risk-on behavior. When we get, but look at this right here, off the 21-day moving average. You got a nice hammer there, and then the following day, big green day, and now it's making a bit of a flag. The TA in cryptos often works so well. I suggest to people to watch cryptos and markup charts in cryptos, just because the TA is almost easy in these things. Anyway, what are we going to look at next? We're going to look at the dollar cost averaging system. What's going on here? Here we are. We want to be on the weekly on that. There we go. Okay, so you can see that this is the SPY. We have turned green. Not only has the MACD line crossed above the signal line, which gives us a solid green line, We are now above the 20-week moving average. We've closed above the 20-week moving average, and that gives us the green shading that says all good to dollar cost average now. Now that being said, I mean, we are at risk of suffering a little bit of a pullback or a sideways action, but if you've been waiting to dollar cost average, this system is telling you to do it. And one of the other things that I like that's nice about this system, when you can see that there are occasional whipsaws. But I've noticed that, going back in time, and we can go way back in this. And if you don't have this, I actually paid a coder a little. It didn't cost much, but paid somebody to actually code this up for me. And I gave it away to everybody in the Discord. We did a session on it. The recording's in the Discord. The link to this is in the Discord. If you want to add it to your own trading view, it's there for you guys. But one of the things that I've noticed is that the longer this red section goes on, the more reliable the signal is when it turns green. You can see that some, in some of these shorter ones here, we do have occasional whipsaws. But when we've got a longer red section, and you can see here these ones are longer, this green signal is fairly reliable. So I think you can fairly confidently start dollar cost averages again into your indices or anything else that you're looking to dollar cost average into. And again, this is not investment advice, and these signals are prone to failure. So use your own discretion and risk. Let's take a quick look at some of the commodities here. We'll look at gold. All right. I just don't understand gold. We're rallying because we're thinking that inflation's getting under control, but gold is supposed to be an asset that goes up. It's supposed to be an inflation hedge. So inflation's coming under control. Why are people buying gold? Why is, if everybody loves equities, why are they buying gold? It's supposed to be a flight to safety kind of thing. I don't get it, but it's rallied quite strongly, the last couple of days. It is coming into resistance. We'll see what happens. I don't understand, so I'm going to stay away from it. I'm not going to be trading it. GDX, the gold miners. See, so here's another thing, right? Look at this. I mean, a tiny bit of a rally, and GDX actually rallied ahead of gold, right? Look at, gold was, gold was going sideways until 2 days ago, and gold was going sideways when the gold miners were starting to rally, and then when gold rallies, the miners go sideways. Can anybody make sense of that for me? If you can, let me know in the Discord, please. What else we got? Silver. Silver had essentially the same rally that gold did. And coming into minor resistance, but this looks like it could go farther if it can break through that 50-day moving average right there. I don't know. I'm not going to play it. Copper. Now, copper is an industrial metal. If we think the economy is improving, we should see copper going up. And sure enough, copper is going up. This is actually a nice little rally this is put in here off this bottom. So this is something we need to watch, I think, because if this continues higher, it's kind of telling us that the recession is not going to be as deep as we might have first thought. Now, if we look at DBC, the overall commodities index, we can see that this sort of chopped around here. We've talked about this 200-day moving average. We've talked about this trend line quite a bit. We've made a move up off of that in the last week or so. Got into this gap zone. Only paused really a day there. Got into this gap, but having trouble in here. But we've got this 21-day moving average below. Well, let's see if that supports. I mean, this could be good for commodities overall if this could continue higher. But that may not, continuing higher here may not be good for equities, because as commodities get more expensive, we start worrying about inflation again. And the agricultural commodities, these have started to move up. Looks like they've put in a bottoming pattern here. And it's really interesting actually to see these have moved up and didn't really pull back much. I think it was on Friday or during the week. We'll pull up the wheat ETF because, you know, the news out of you know, Russia, Ukraine, that Russia is actually going to allow wheat shipments through, and you know, we saw that on Friday knock wheat down a ways as it was trying to rally a bit. So yeah, we're seeing some. If you're into the, you know, commodity space, we are seeing these come back to life a little bit. A lot of that is from the energy space as well, which we'll look at right now. But let's see what we got here. Crude oil. So what's interesting here, I probably should have looked at XLE or some of the subsectors within energy, because you would think that crude oil is up a lot more than this. But this does seem to be putting in, you know, a bit of a bottom or forming a base here. I don't think it's ready yet. I'm, you know, like I keep saying, I'm long-term bullish on oil, but short-term I'm not. Short-term I'm bearish, and I don't think this is going to go. But if we look at some of the ETFs here, like XLE, we can see that, you know, these oil companies have been rallying nicely, especially on Friday. Look at that go. But oil has not been making the same kind of move, right? These companies, though, will often lead the oil futures and the, you know, oil, the physical oil. XOP, the oil and gas exploration and production companies, really good rally in this one, and has even cut through the, you know, the 100-day and 50-day moving averages. It looks like it needs a bit of a rest, but you know, I'm not. I guess maybe we should probably draw a resistance line right up in here. Where is that? In around 142. Probably find some resistance, and maybe off of this little pivot right here as well, in around 148 perhaps. So yeah, I think this is going to need to take a bit of a rest here. OIH, the Oil Services ETF, very similar kind of rally we're seeing here. Not quite as strong, I guess, as XOP, as the oil producers, but you know, moving nicely off this bottom. But again, you know, after looking at these charts, right, when you look at crude oil itself, we're not, you know, not seeing the same kind of action in crude oil. So that, you know, kind of tells us that a lot of this move, you know, could be coming from natural gas, which has been rallying quite strongly, but it has been pulling back in the last few days. So this is natural gas we're looking at now. I know we don't look at this one too often because it can be it makes some crazy moves, even more crazy than oil. But you know, so this is probably where the strength in those companies is coming from. TAN, the solars, have made a really big move. So there's been some bills passed in Congress and passed through the Senate as well, I believe, that affect the solar industry and the cleaner energy industry in general. And you can see the big gap up there on that news. You know, I don't know how you play this now. You know, if you were watching this closely and maybe bought this gap up down here, or maybe, you know, but you can't buy that gap, right? So I think there's still a play in here. We just got to be patient, and we got to wait for a pullback, probably to this 81 area, and then wait for a setup. Maybe there's no pullback. Maybe, you know, maybe this pauses here or pauses up in here in this 92, and then gives us a nice little setup. But it's worth keeping an eye on. But you certainly can't jump right in here now. Uranium is another one that's making a move. Nice base. So this is the uranium ETF. Really nice base here. Really nice move out of this. You know, this is a beautiful setup. Sorry I didn't bring it to you guys. I took my eyes off the ball on this one. But again, you know, we probably get a second kick at the can here. What do we have? This is now the second leg up. Yeah, there should be a third leg up in this. So let's, if there's a setup, I'll bring it to your attention. But right now, again, you know, you can't really jump in this quite yet. Let's go to our consumer discretionary sector. And we can see that this made a nice sort of making a nice rounded bottom, big gap up on Friday. Should probably get that gap drawn in because I think we might come back and test that. Go. All right. Oh, this would have, that's right, would have gapped up on Amazon's earnings, I believe. Probably responsible for that gap. You know, right through resistance there, but still pretty close to it. I don't know. I don't really have an opinion on where this goes. I mean, you know, the easy thing to say is, yeah, this goes higher. But I think we need a rest, much like, you know, a lot of the market probably would be healthy if it had a rest. Industrials, strong move here as well. A little surprising to me, but the consolidation they broke out of here. If you were watching these things, you probably could have got in here and got some of this move. It was a nice little setup. Again, you guys, most of you probably know that I was away in the beginning of the week and had really terrible internet. So I wasn't trading. You know, I didn't trade at all really. I made a couple of really small moves, just portfolio adjustments mostly on Monday and Tuesday. But I wasn't actually, you know, actively trading or watching the market on Monday and Tuesday. So I missed a lot of setups like this. Financials. These things look ready to go. Look at, I mean, you know, they had really nice base here, right at the bottom of that gap, and then on Friday, nice move right up to the top of the gap. I think we could get a really another really nice move here. You know, the beginning of the week and take us up into the resistance here. And this is good. If the market is going to rally, if the bear market is over, if dare I say, going to call the bottom in the market. We need financials to come along with it. You know, it's the market is just not going to be bullish without having financials come along. So that brings us to the first of the setups that I'm watching closely, and this is good for this. This is JP Morgan, by the way, and you can see that this has been in a long-term downtrend. Well, I guess, you know, sort of intermediate term here. Should have actually drawn that trend line in before we started here. Go right about there. So, you know, we've got this downtrend we've been in. I want to expand in on what's going on right now, though. Okay, so everybody can see that, yeah, we've been in a downtrend. Now, this does look a little messy. It chopped around in here, but for the most part, it made a kind of a big messy base. And we have some really choppy action here. This, you know, massive move, big, huge gap to the downside, instantly recovered. I mean, this is a blow-off bottom, right? This is capitulation right in here. Look at this volume. I mean, this scared the hell out of them. And you know what happened? They came in and they bought it right back. With the big volume, nice hammer, big green candle the next day. Still a little bit of selling, right? You know, there's some people who were saying, okay, no, I want out of these funds. I want out of this company. I'm going to get out of here now. They saw this as an opportunity, and then they bought it right back again the next day. And then we've built this base. And I should draw that in as well. So we built this nice base here, and we're still in it. But we're looking ready to go. I mean, if this thing isn't ready to go on Monday, I don't know what is. So you can see you've marked where I've marked where I intend to enter. And again, this is not investment advice. You trade for yourself. But if we break out above these two highs, I want to be in that. I'm worried about the 50-day moving average just overhead. But you know, that's about $2 from the breakout point. It's not too bad, and we've got that downtrend line there. And you know, and also keep in mind that this is a financial. The beta is low-ish. The beta on this one's 1.14, so it does move a little bit more than the market would move. but not too much, right? So it's a bit of a safer play than some of the growth stocks that we normally look at. Now, a couple places you could put your stop on this would be right under, just under Friday's low. If you really like this company, if you really like JP Morgan and want to hang on to it for a while, you think it's going to go higher, you think it's going to break out above that pivot, you think it's going to make a higher than this pivot over the next, month or two or three, you should probably have a looser stop, which would put your stop under, what was that, Monday? Tuesday's low. And that's, so that would be just under $113. So that's a couple of ways you could play this. Yeah, I think this looks good. Definitely worth keeping an eye on for tomorrow morning. What else we got? Let's look at some technology here. So we're looking at XLK, the technology ETF, and we can see that obviously this has been behaving nicely. We've got through this zone of resistance. This is great. What can I say? It looks like it's going higher. It's probably going to go up and test this old gap here. And that resistance zone up in there, come up, check out the 200-day moving average. But again, we don't want this just to blast higher. A little more up in this is fine. Maybe up to this pivot right here. Oops. Uh-oh, I lost my drawing tools. There we go. Yeah, that pivot right there. I think we need to start thinking that it's going to run into resistance once it gets up and around this 149. Then you got 150. Got a bunch of resistance in here. That'd be good. This area here would be a good place for this to pause, take a break, rest to move higher. Let's get. So I'm talking about sort of in this area right here. Be a great place for this to consolidate before moving higher. All right. XLC, the communications ETF. This one has not been performing as well, and that's because of Meta, Facebook. But if we're going to be in a bull market, if we're putting the bear behind us, it's about time that this thing stepped up. We were looking for a break. The last time we looked at this, we talked about this consolidating in this area. And it kind of tried to, but it sort of fell out of it, and it's come back into it. We were talking about it consolidating there and moving higher. That didn't happen. We're just going to move that. Because we can still, this is still kind of sort of setting up in here, right? You can see we're trying to make a bit of a base right there. We're trying to make a consolidation, make a base up in the top half of this much longer consolidation and base. Last time we tried to break out, we failed. So keep an eye on this. It looks like it wants to go. It's just having trouble. So let's look at the FAANGs. We've got Apple. Apple had nice earnings. Made a nice move on their earnings. We gapped up. It more or less followed through there. Is going to probably so we've got this long-term uptrend line, and often when you make a move, and this uptrend line obviously is really obvious. When you make a move into that line, it often acts as resistance. But I think that's minor. I don't see anything bearish here in this Apple chart, other than if this were to gap down, or even if this consolidated here and then gap down, that would be an island reversal, and that's going to scare the heck out of people. I don't think that's going to happen. I think this makes it, continues to move up for the next couple of days. Consolidates up in here and then probably goes higher. Amazon obviously is going to have a giant gap on the chart, and it's gapped right up into the former gap. So we got to draw another gap in here. This is crazy gaps in this. Amazon never used to gap like this, I don't think. I don't remember it ever gapping, big and huge. Oh, there's a big gap there. But, back in the past, it was pretty stable through all its earnings, right? It's only in the last couple of years it got all weird like this. So, this is not the healthiest looking candle in Amazon though. So you know, we're gonna have to pay close attention to see what happens here with it. But let's get these gaps drawn in. So from there to and a gap to there. All right. Yeah, it looks a little. This candle looks a little fragile, so I wouldn't be chasing it. You might get a pullback. Hard to say. I'd be surprised if it pulled back any farther than this old gap though, and then turned higher. Because people will see that, and people will see an opportunity as, or a pullback in this as an opportunity. I think, because you know they're going to feel like they missed the boat on this one. And remember, we have been talking about the bottom in Amazon for quite a while, right? And ways you could get in this. Okay, so Meta just can't get it together, but it is still holding down here. But you know, just not. It's a real battle that's going on. I mean, it's got these bullish candles. Like, you know, you had this hammer here, and it should have gone that day. And then you put in another hammer on Friday, but you know, is it going to go anywhere? Is this low going to hold? I don't know. You know, we tried to break out before. I should probably draw this as a base. You know, we tried to break out of that before and just got slammed right back down and you know, back into these lows again. So hard to say. I just don't want to touch it. I don't want to go anywhere near this thing. What else we got? Netflix, another one of our setups. Okay. Look at this. Let's get rid of that one. Let's draw that in. Really nice looking base here. Something like that. It looks ready to go. Look how it's tightening right up here at the top of this base. It's ready to go here. Concerns though. The 100-day moving average right overhead. This giant gap right overhead at 245. That's a concern for, you know, for this moving higher. But it is possible that it could get right through that in one, you know, one day's move. It could take us right into this gap, and then we could keep moving up to the top of the gap. That would be a really nice play. So I think that you know, this looks pretty low risk. You can enter right above this candle with a stop below this candle, below that candle, or below the whole structure right here. You know, how much risk do you want to take, right? You know, and how much of a play do you think is in here? How much do you like Netflix? So yeah, I really interesting setup here. I'll be watching that closely on Monday and through the week. You know, if it doesn't break out on Monday. Let's take a look at Google. Google has been having trouble just getting going, right? It's almost like Meta. But I have a lot more faith in Google to pull itself out of this than I do in Meta pulling itself out of this. So nothing to do here right now. Watch out for resistance. You know, resistance in this area here, in around there. Yeah, we've got, you know, if you want to get in Google, I think you've got time. I think it goes up for resistance and moves sideways for a bit. Tesla's made an amazing move off of these lows. We would have expected to see it break out of the downside out of this triangle, this pennant right here, but because that's a giant bear flag, it broke to the upside, and it's doing really well at continuing to the upside. You know, and it even gave you, if you like this stock, it gave you a really nice opportunity to get in here. You know, when you see a breakout like this, and you get a nice move up, and you have this 3-day pullback, you know, just draw yourself a little line, you know, along the top of this pullback here. There we go. And when it breaks out above that, you just, you know, you got to get in there. Congrats to anybody who got in on this move. I would watch out for the 900 level. We're pretty much right there now, right? And this 200-day moving average. A lot of psychological resistance in this area. But you know, who knows? Maybe it gets through. Maybe it goes up to test. You know, tries to get to 1,000. I bet it pulls up before it even gets to 1,000. You know, maybe at this level right here. Was that 978? We should probably get that. Yeah, 975. Yeah, watch out for that level if you're in this. All right, semiconductors. Good news for these guys. The CHIPS bill passed the Senate and the House, and I don't know if Biden has signed it yet, but it's probably sitting on his desk waiting for him to sign it. So this is, you know, obviously good for domestic semiconductor manufacturers. The semiconductor ETF is finally starting to do well. It just felt like there was a lot of false starts in this one, but it looks like we've put in enough of a base here that we can continue higher. And if we look at some of the names, individual names, we can see that they are starting to move up out of bases. This is AMD. Making a nice move. Maybe a little late right now with some resistance overhead. Maybe not though. You know, it's I'm on the fence on whether these continue higher or not. Without pausing first. I think AMD's got another up day in it. A pause and then a move higher would be good there. NVIDIA. NVIDIA not as strong as the rest, but nice little setup here. You know, if this breaks out above this. It could make a nice move. Micron's one of my favorites, but it's not performing. But it is, you know, it is kind of making a base. When the others, you know, when the bigger names here, the ones that have been performing well, pause. I think that's when we see some of these like NVIDIA and Micron will go. I got a couple others here. This PI, this impinge, is one that I've been talking about a lot, and it's made another leg higher. But you know, how do you get in that after a move like this? This is starting to get parabolic. Look at this volume in on it here. This is probably ready to roll over or at best go sideways. You know, really starting to look like a blow off. Especially on Thursday. You know, it's a little surprising that it would have had a nice green day on Friday too, though. All right, let's look at healthcare. You know, I mean, it's going up. I'm not thrilled with this price action, though. I think there's better places to be. I think tech is calling to us, right? So I think we're going to find resistance here in healthcare, maybe even roll over and come back down and test the bottom of this range. Biotech has not been. I know we were looking at a bunch of biotech names, and it looked like biotech was going to do really well. It now looks like biotech needs to go sideways, but we should keep an eye on this because, you know, there's a nice. We were looking at this bull flag, and obviously that, you know, has failed to break out. You know, we could extend this bull flag out like this kind of thing. I think I'm gonna stop calling this a bull flag and just start calling it a base. So let's draw this base here. You know, and it had that attempted breakout, but I think this is going to base longer or even roll over and come down, possibly test the 50-day moving average or lower. And if you look at ARKG, the genomic ETF, we were looking at playing a breakout in there. I don't like this anymore. I'm just gonna. Whoa. That's really odd. I don't know where all my lines went. And my. Weird. Sorry about that. It's really strange. Okay. This could be setting up for a move, but like I said, I don't like it. I think we just got to wait on that. Yeah, I've lost like part of my. Hang on, I gotta fix this before we go much further. Oh, okay. I'm gonna have to do without. All right, so XLRE REITs. interesting price action in this. You know, it really kind of looks like it wants to break out of this and go much higher. Also looks like it could just roll over here. But REITs are too slow for me to play, so not going to play in that space. What else we got? What was that? XLRE? XLP, Consumer Staples. They have moved higher out of this space. You know, they've rallied with the market. You know, we want to see, you know, staples. They're defensive. We want to see them underperforming. There's better places for us to focus our energy on. Same goes with utilities. They've had a really nice move up here. If you're in them, that's great. But there are better places for us to focus our energies. Home builders continue to disappoint, in my opinion. If you look at the individual names, they're all kind of disappointing. This XHB, the ETF, is, you know, looking very constructive. It's making nice moves. But the individual names are just being a real pain. So I'm gonna kind of stop watching this space, I think. All right, so some setups maybe. Disney. This has just been horrible, this thing. But it really looks like it's putting in a bottom now. You know, we had a base here. We put a base on top of that base, and we are now breaking out of that base. We do have a lot of resistance overhead, though. But yeah, I think this could start to go, or at the very least, you know, be in recovery mode. So if you're invested in this, and we're thinking about adding, this kind of looks like the place to add. As for a swing trade, yeah, I think this is a decent little breakout here, and it hasn't gone far enough that it's left you behind, right? Might be worth taking a look at. Palantir, another one that likes to disappoint. This one, it looks ready to go. There's a bit of a setup here, but it disappointed us before. We were looking, you know, to buy the breakout of this space earlier, and then it just pulled back on us. So, you know, tough call. It's a little bit risky, but it's tight, right? It's not much risk if you want to get in and play this. Square or block. This looks ready to go. You know, we've got you know, tightened up right under a minor resistance right here. Draw that in. Something like that. Let go. Yeah, this looks like it wants to break out. But again, you know, there's going to be a lot of overhead resistance. We've had some consolidations up in this area. Actually, I should get rid of this old gap. But there could be, and there's definitely room for this to move, but we just got to watch out for a bunch of the resistances overhead. Roblox is one that looks really interesting. We've been looking at, you know, sort of this rounding bottom in here. We thought maybe cup with handle. It, in the very short term, you know, it's got a little bit of resistance overhead that it looks like it's ready to break out of. It would be right about here. You can see how that consolidated. If this does break out, you know, this 52.5 to 53 zone looks like fairly strong resistance. And maybe it, you know, fulfills this cup and handle that we've been thinking is maybe going on. Maybe the cup and handle, I mean, maybe this is the handle here and it's breaking out of it already. But no, I think we get a pullback from this 53 zone. And then it really, really goes. So in the very short term, there's probably a play in that. And then if you're more patient, if you're wanting to play this longer term, I would suggest being patient on this one. PENN, National Gaming. I mentioned that this earlier. All my lines got blown off of this too. He signal did something really weird back there. Because I had a whole bunch of lines drawn in on this. But anyway, you can see that it's been in a really long-term downtrend. Get that drawn in. We have an accelerated downtrend, or a few of them. But you can see that we've broken that downtrend. We've got a nice bottoming action here and a really nice tight consolidation bull flag going on right here. So just you know, draw this in here. So in the short term, we can get a measurement on this. Even in the short term, you know, it's going to give us there's the potential for a nice little move here. So what have we got? We've got from here to here. If that breaks out of there, just grab that line, draw that from your breakout point. What does it give you as a target? 43. And where are we breaking out of? 35. Not bad. $8 in that. That's pretty good. It's you know, almost 25%. So yeah, that's a play that I'm definitely interested in. But you know, you got to remember that this has disappointed a number of times in the past. You know, recently, right here, is a very similar sort of. Actually, I guess not really that similar looking breakout. I mean, it looked like it could have bottomed here and was trying to before it failed again. But this pattern right here looks a lot better and really nicely risk defined in there as well. And yeah, and that's about it for setups. There are a lot more setups, almost too many setups, but these are, I've showed you the ones that that I like the best. So let's see what we've got coming up. So coming up this week on Thursday, we have Ticker Talk, and then I'm not taking any weekends off through August that I know of yet. Anyway, unless I get a really good offer. Yeah, so we'll have the briefings every weekend. Be posting those. Ticker Talk on Thursday. A week from Thursday, I'm going to show you guys how to lock in profits on your options. If you're doing your earnings plays on options, if you got big gap ups in after hours, and you want to lock in your profit before they pull back, because often they do pull back in the after hours when they pop up, I can show you a way to lock that in even though the options market is closed. And I think you'll find that really interesting if you make those plays, because it's something I see people complain about all the time. You know, they've got calls on something, there's a big, you know, jumps up in the after hours, and then it starts pulling back, and by the time the open comes, it's given back all of that really nice gain. There is a way to lock it in, and I'm going to show you how. So that is on Thursday the 11th. And that is it for me. I hope you guys enjoy the rest of your Sunday and have a good week next week. And we'll see you all on the Discord.